Hi everyone, it's Paul Lang from Disciplined Trading Strategies with this week's Trade of the Week video. This is actually going to be a long-term position. I've done this once or twice before. A couple of reasons. We had a good week in the room, pretty good week. There were some good trades. Number one, I already did some events where I featured a couple of the good trades from the trading room. And number two, I do a long-term position every once in a while. And I want to remind you that I love both long-term and day trading. It's just that you don't see as many long-term things because there's not as many long-term trades. I'm taking 2 or 3 day trades every day. We got a lot of exciting things going on or fun things to talk about, some good educational stuff. Long-term positions have, 4, 5, 6, 7 open at a time, and they take a couple months, and they're just not as exciting. But this one here is a long-term position I wanted to go over. It was kind of a funny coincidence because we closed out the first third of one of the long-term positions this week, and that was ROST, R-O-S-T. I'm actually doing one that closed the first third a couple weeks ago because I didn't do the trade of the week last week. We had a week off from that. And it was kind of funny when I went back to get the slides for a long-term position rather than a day trading position. The last one I did was back on May 22nd of 22, and it was ROST, and that was so funny. I didn't even remember that. So I did one on ROST back a year and a half ago. ROST happened at a different position. ROST closed out yesterday or day before. But I'm going to do this on Dave & Buster's, whose symbol is PLAY, P-L-A-Y. And this is entered on the 24th. This is based on a weekly and daily major resistance area. And note the entry, it's off a 15-minute DTS buy setup failure. Management, typical long-term manager for me. I have very loose management. I try to get to targets. My reward to risk, my Sharpe ratio on long-term positions is very high. For the prior 2 years, it's been 4, almost on the button. And this particular trade, the first third, not the whole position, the first third closed out an 8-to-1 reward to risk. Coming up this week, all we have for free members is Monday night, the scanning night. So be there September 25th, Monday, for the scanning of long-term positions. Come join us. You can ask your own questions if you'd like to. So this is what went out on the 20th, short play. This is emailed to subscribers, the long-term trader, and also they get a text telling them that there's an email. This went on the 20th. That's the original trade there. You can stop and look at it if you want to. And then on later that day, on the 20th, the numbers were adjusted because some new numbers formed. The stock had kind of dipped down and rallied, and I felt good underneath that number. So this actually was then traded under 46.00, stop over 47.00. A $1 stop. It's not a terribly volatile stock, so it was a fairly good amount, that dollar. And the stock didn't actually trigger then until the 24th. You'll see that on the last slide here, the intraday slide. So note, this is the monthly chart, and this is where a trade like this begins in my mind. The major concept sets up here. So this is this big monthly resistance area right across there. Note, some people get confused. You're thinking, oh, those aren't the same tops. They aren't the same highs. It doesn't matter. When you understand trading properly, it's an area, it's what happens in the area. Something like a stock like this, I may be stalking, if you will, for weeks. Many of the things I would stand there for weeks, looking for just finding the right entry in there. So once I see we have this high in here, and once I see we're approaching that high, I'll be taking a look at it. And again, maybe it reacted to this high, it really doesn't matter. I'm looking for that special sign that is ready to turn around and for that great entry. That's all that matters to me. So monthly chart was in gear, in play here for part of the strategy, and originally had it on the watch list. The weekly chart, then you start to see how we reacted to those last couple of highs. That's where I'm shorting right in there, right off that top. Last couple of highs in here. A little known thing in trading is that if you want to short, it's actually best to break the prior highs, not stay short of them. So we broke the prior highs on the weekly. We did stay short of the prior highs of the monthly, but it looked like we had set up a new level in here right around $46, which coincidentally was exactly the entry. So there's your kind of thick area of resistance. Daily chart right in here. Believe it or not, I actually shorted that green bar. That actual high, the top of the entire rally was where it was short. You'll notice that the entry is under 45.93. Why not 46? I'll show you on the next slide why that is. There's a rule that we use. And then stop over 47.00. And there's the target, which was taken on September 6th, I believe it was. You can see it's a couple weeks ago now. Target 2 and target 3 still open, and the rest of that trade will continue to play out. This is a long-term letter. and I want to get some even bigger targets for the next couple of areas now that it's safe and in a nice downtrend on that daily chart. And finally, you can see this green bar in here has a fairly big range. And if you would have used a monthly or a weekly sell setup or something as commonly taught, this wouldn't make any money. So I actually come down here and find an entry during the trading day. And if you're a subscriber, this is texted and emailed to you, and there's usually plenty of time. But I oftentimes find my entries during the middle of the day because the most reliable entries actually do come after the morning. So even though target one taken 37.11, the rest of the trade that's open is actually doing better. Right now, the current price at the time I'm doing this is 35.97, so we're over $1 lower than where it was. That's another full hour, about 9 hours then on the back 2/3 of it. So you can see here's the day, the 20th, that's the day the trade was called. It was based originally on this area in here, but then it rallied and pulled back into this, and that's when the update was sent out to short underneath this tail. It held that tail then for the 20th, the 21st, and then Monday apparently was the 24th. And it ran down initially in the morning, and the short then became under this number. And that's not a separate email that goes out, that's simply a rule that's in place that you never short a long-term position in the opening 5 minutes. So it gyrates around that opening 5 minutes and you short under that low in there, because a lot of times that little bottom tail will hold and it'll go higher. Note that after it triggered, it did come back, so you're not thinking happy that day, but that was the high then right there, and it continued to roll over from that point. So the entry ends up being right here under 45.93 under that tail. That's the new entry. That arrow's a little bit off. It's just kind of showing you what, where the actual resistance or support area was that morning. Target 1 taken 37.11, and target 2 and target 3 still open. This trade is not from the DTS Trading Room like you normally hear in this part of the play of the week. Rather, this is from the DTS Long Term Trader. It's a letter that is emailed to you. It has fantastic returns. It's easy for anybody to follow along, and you have full management of every single position. It's a fully managed guide. You take your own trades, but follow what's being done in the Long Term Trader. If you're interested, figure out how to sign up for that over at the DTS homepage. I'll give you a hint, it's on the subscription services tab. You can read all about the Long Term Trader and also sign up for it there. If you have any questions, let me know. Until next time, this is Paul for DTS. Good trading, everybody.